Good morning. Today is Tuesday, January 7th, 2014. This shoot is being done at 8 a.m. Welcome to Commodity and Equity Chat. Here I give a wrap-up of the commodities and the equity complex at a macro level. We'll analyze each and every trade that is possible in the days to come. We'll be doing a separate segment on equities alone in terms of specific stocks that we could invest in or trade in tomorrow morning. Today I'll give a macro level analysis of the Nifty as it stands as of now. Nifty hit a low, tested the support of 6180 yesterday and closed above around the 6200 mark. 6200 seems to be the pivot as of now. Any break and close below 6150 could test 6180, could test 6150 to 6130. A break below 6130 could see another 80 to 100 point fall. On the upside, resistance is now at 6260. So on a tighter range, we can see that the range is between 6150 to 6260. On a broader range, between 6000 and 6000 to 6300. Now, how do we trade the Nifty? It's a very tricky trade. It's in a no trade zone. One is, if it breaks and closes above the 6300, you can enter fresh longs. On the other hand, if it corrects down, buying opportunities would come on dips to around 6000. Now, if it does not come to 6,000 and it goes above 6,300, how do you trade it? Well, that's a risk that needs to be taken. Wait and watch seems to be the approach as of now. Stock-specific scripts need to be watched out for, which list and will be segmented tomorrow in a separate photo shoot at 8 a.m. tomorrow morning. The data from the US yesterday were mild negative in terms of the services PMI data. Janet Yellen took over as FOMC chief yesterday. She got nominated by the Congress. So all eyes will again start pointing towards the next Fed meet, which is likely to come up towards the end of January. FOMC minutes of the last meeting are expected to release in the next couple of days. That will give pointers towards how the stimulus is likely to take shape in terms of further withdrawals. Beginning January, as was finalized in the December FOMC meet, 10 billion worth of treasuries and stimulus amount would be removed from the system. That is from 85 billion to 75 billion. It has been brought down. That would take effect from January. On the Indian bourses, INFI results are expected next Monday on 10th of January. That will give an indicator as to how the trend of the markets would take place as far as Nifty is concerned. So overall Nifty, a tight range would be 6150 to 6260 and a broader range on the resistance at 6300 and support at around the 6130 and below that at around the 6000 mark. Bank Nifty is closer to the support at 11,050. A breakdown below would give shorting opportunities. On the flip side, the resistance is at 11,550. Overall Nifty, on the Nifty, the bank equity seems to be the weakest and likely to test support, or a break below could give fresh shorting opportunity. CNX IT index seems to be the strongest above the 9,650 mark, as evidence from the fact that the IT scripts are doing reasonably well. IT and pharma seems to be the areas that needs to be focused on as of now till clarity comes in. INR is now trading in a band of 6180 to 6250, closed at around the 6220 mark. On a broader range, 63 seems to be the support, and 6150 seems to be the resistance. So 6150 to 63 on a macro level. On a tighter range, 6180 to 6250 seems to be the range within which the INR is working. It has been consolidating in this range for the past 45 days, and so long as breakouts do not happen on either side of the range, it could consolidate and making markets that much easier to trade. Now we come to the individual commodities complex as we've seen. As I stressed earlier, yesterday's PMI data services sector from the US seemed to drag down the markets, especially the Dow, and that could be evident from the fact that the overall the US dollar also traded in a marginal range. Chinese manufacturing data also seems to be mild sluggish, especially in the services sector, and this seems to impact the way the base metals are going. Gold is now trading again at the 1240 mark. Looks positive, buy on dips with support at 1230, looks to test 1250. A break about 1250, more positive till 1260, and the resistance is at 1270. As of now, it seems to be moving in a range of 1235 to 1245 since yesterday. A breakout above below 1230 and a break above 1250 on the upper side could be the next move. On the MCX, closed below the 29,000 mark. Mild positive again if it closes above if it sustains above the 29,000 with resistances at 29,200 and 400 and support at 28,800. Silver is now trading at $20.20. 2030 is an immediate resistance. A break above could test 2050. Support is at 19.9 and 19.8. On the MCX, trading in a tight range between the 45 to 45,800 mark. Mild weak if it closes below 45 to test next supports of 44,800. On the other hand, if it sustains above 45,600, 45,800 and 46,000 is the next range to be tested. Crude trades mild weak in dollar terms at around the 93.50 mark. On the MCX, a break below 5,900 looks weak. It broke the initial support at 58.70 and closed at 58.46. Now 58.20 and to 58.30 seems to be the next support where buying could emerge. Overall, the range could be now 58.20 support and 5900 resistance. On our weekly calls, we had given a sell at 5900 for targets of 5800 and 5750. That call seems to be running as of now. We booked some part profits at the lows yesterday of 58.45. Natural gas trading in a tight range with support at 265 to 264 and resistance of 270. Next, a break above 270 to 272 could be more positive to test 274 and 278. Maximum resistance is at 278. A close above 278 is more bullish till 282, 284 to 290. Immediate support is at 265 to 264. Follow levels given in our weekly call for buy on dips with stop loss below 265 for target of 272 and 274. Base metals seem to be trading in a tight range, especially copper. Copper yesterday broke the support of 465 to test 462.90, but then drifted higher and closed again above the 465 mark to around the 466.50. Now 465 is a pivot on the downside and 470 is a pivot on the upper side. A close below 465 could be could set in mild weakness, and a close above 470 could see the next uptrend moving up. Hence, trades are advised only on either side of the range. Do intraday trades as suggested in our intraday calls, which we will be posting on our website and blog. Nickel, our weekly call had given a sell below 860 with stops above 870 for targets of 840 and 830. Now, so long as it sustains below 850, it looks weak to test 840 to 830. Resistance is above the 860 mark as of now. Follow levels given in our weekly call. Lead overall broke the support yesterday of 135 and tested low of up to 134. Now closed above the 135 mark. Support is at 134. If it sustains above 135, could test again 136 to 137 with stop loss below 133.90. Zinc positive above 127 with support below 125 to test 128 and 129. Aluminium overall trades sideways with a pivot at around the 109 mark. If it closes above 110, more positive and below 108 would see further bearishness in the commodity. Overall, base metal seems to be highly range bound, as also the bullions. Crude is a bit weak, sell on rises. Natural gas positive above the pivots mentioned in my talk now. Buy above the resistance or buy on dips. Nifty seems to be in a range as given below. We will be given a special highlight on the individual scripts that can be traded and invested in our segment tomorrow. For further updates and commentaries, please visit our website at www.akshayashiv.com or Lotus Advisory Services, or make an entry with likes in our Facebook at facebook.com/Lotus Advisory Services. Have a safe and profitable trading day. Thank you.